Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So BTC got a bit more of a push over the weekend on Saturday, December 2nd. Now we are on Sunday, December 3rd, up to that 39,768 region, to the top of this range over here from where we dropped back in May of 2022. We're above the point of control of this range from over here on the left, and coming to the 706 region of this diagonal pitch fan we've had price since it's January. How far can we go? How long does it sustain? Let's go into high block to figure it out together with High Block Capital. What is high block? Well, people lock that liquidity into the charts to get burnt to a crisp for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. Booyah, everyone else. How's everyone doing out there? Booyah, booyah. BTC just did the impossible. What's up, Illa Rage? Stephen Salisbury, thank you for stopping in. So, if nothing else, tuning in to see this liquidity map, heat map, is worth it because it costs a pretty penny every month. So you get that analysis to look at together every day. So let's go ahead and change this to max liquidity, not relative, and take a look at the minute. So the minute chart came up into these 25x partners in crime, and they just obliterated every single short there.
Fatality.
And meanwhile, getting some interest generated down here to the tune of $270 million down at 38.79. They burst up into those shorts. So at some point there will be a reckoning to the other side of the equation in terms of a scam wick or something that comes down and gobbles all these guys up as the larger players take out their position. When will that be? We have 13 billion imbalance in long liquidity now on the minute time frame, so we need to expand our vision to the higher time frame pools in order to get a clearer image. So we start our way up the timeline through to the 7-day. The 7-day time frame just went and grabbed all of those shorts up at 39.4 and beyond. The ultimate left remaining is down here at that sweep of the 37k. We were having some alt possibly exploding here. Let's go see what the crypto bubbles has to say for itself with terms of everything taking off. You have Ordi, Rune, IOTA, Tia, and more having a bit of a day here. On the week, Lunacy having some rise up with Rune, and Doge, Rose, Wemix, IOTA. Easiest way to see what's in the mix with crypto bubbles. On the hour, Pyth, Render, Tau, BSV, CVX, Sol, Uni, BCH, Bitcoin Cash. Alright, so let's go back to high block and go to the monthly. So the monthly coming up into these regions, they have not yet even percolated double-digit numbers, and yet they came up into this region. What's up? You want to eat ice cream? It's too early for ice cream. Can you wait a little bit longer, please? Please watch him and tell him not to eat that stuff. Can you close the door too? Sorry. All right, so yeah, the 40k region almost getting some double digits up here. You could basically go to 41.5 if they're considering this an interesting zone to take. My son is having a hissy fit. If we go to the 3-month, there is double digits up at 41.4. So you have 25 billion at 41.4, 23 billion 41.2, 18 billion 41 even, 26 billion 40,008. So the entire range of liquidity within this scale is up to that 41.4 region in terms of liquidity interest of shorts to be taken, and all of them are now underwater from that point here at November 29th when they burst up. So they could come up and grab those guys. All of these profit taking guys putting their limit orders into profit, most likely at some point they retrace down into them. The liquidity ball is generating some steam though to the long imbalance. Definitely at some stage the idea to pivot would be in order. 6 months, not much to see in the immediate range. If you go up into these 40,005, 40,008, 40 billion up at 40,008, 30 billion at 41.4, 32 billion 41.4, and it tapers at that point. 2 year, the final frontier. 2 year has 85 billion at 41.2. So if they clear this entire range, that's about as thick of a range as it gets. You do have your 43.6, 68 billion up here, but there's some tapered zones that need to generate more interest first, in my opinion. But let's go back to the monthly and go into the charts. How's everyone doing out there? Hopefully enjoying the weekend. What's up, Dingo? If you get a chance after BTC, can you look at ETH, Polygon? Sure thing. So the monthly still has that range, I guess, in this region to go up to 41.2. I don't know what the narrative is for doing so, other than where is gold? Yeah, gold was getting Did I clear my chart? Why is it not? I had a bunch of stuff on the chart, but it got deleted. I don't think I removed everything. Maybe I did. Either way, all right. Oh, there it is. This is an old one though. This is not my usual. Yeah, there we go. So it exceeded the deviation levels. Let's go ahead and look at what one was on an older time frame here. Came down to that, and now we're starting to make our way higher on these store of value assets. So the store value having some burst up as the dollar loses steam, but also pivoting into different sectors with the Dixie and the USD JPY. Oops. JPY USD. And that rocket that printed down there as the journey continues for as they put stuff into the mix. So we're going to make our descent through the time frames here. Let's go ahead and do that now. We had an inversion cloud bounce on the 12-hour a few days back. We'll go over what that means here as we turn on the indicator. So it did not close a cross down event. We were saying watch for the cross down event. It did not close, so they managed to stave off the effect of the cross down of the 3-day with the candle close. So let's go ahead and take a look at link in the description for more. Heads up display is on. You can go down to features, toggle at your leisure all these components, trend cloud, baselines, stochastic array, and more as we go over them together. So the 3-day adaptive being reclaimed was one of these massive ideas that we were banging our head against up at November 9th. The previous time we butt our head up against it on March 29th, we saw a severe rejection and downside ensued for many months thereafter. Here we have reclaimed it for multiple candles and started to make our path above that 706, 786 region of this trend-based fib extension level. So we got above these levels as well. Those were massive to hold. The 706 trapdoor holding was a great one, and then holding this baseline from crossing down was another. So with this in mind, drifting up to that 41k and beyond does not seem like it is an impossibility. It seems very possible at this time. And the weekly closes in just a day's time. So how does the weekly close? We still have the baselines open here on the weekly in wide effect, still trending on the weekly to the upside. If we go ahead and switch back down to the 3-day, 3-day just closed, starting to curve these KD lines, money flow beneath the RSI, tuning up for a possible double top to clear that range, perhaps. And if we go to the daily now, the daily cross up event of the baselines is now giving this surge to continue into this order block after having that inversion play off of the 0.65 here, which was the 12-hour cloud. So we got a burst off the 12-hour cloud here. Interesting that the baseline or the trend cloud is still tilted to this angle. How's that going to work out over time is the question. Let's go ahead and take a look at the 22-hour. 22-hour slowly but surely making its way up. The money flow is still beneath the RSI, suggesting you could still get a burst up. This is low liquidity weekend, and we saw some plays over the weekend, so there was some overnight algorithm set for the weekend plays, which generally doesn't happen unless they're intending to trend up some more. There is some more stuff going on. Monday is false move Monday. How are they going to manipulate from there? Going to the 12-hour, this is the inversion play off of the cloud, talking about an expansion or continuation at that cloud effect level. Basically the 0.5 region of this path here, from here to here, 0.5 reaction. I think it even wicked down into the pocket here. Yeah, right at the 618. So you had a 618 flash point here beneath the cloud, and then we surged up from that point on Monday. So that Monday 618 bounce from there was the key entry zone from Monday. And let's go ahead and take a look. We are now reaching possibly into these regions of that deviation of that impulse. Okay, going into the lower time frame, the 12-hour time frame is getting gassed on the stochastic and the Williams, the money flow and the RSI getting into heated overbought territories. If we go into the 6-hour, very much the same as we drift up into the short liquidity as the shorts are being flabbergasted into obliteration. And the 4-hour cross-up event is still holding with the baselines pointed in an angular momentum of continuation here. But you are overall gassed out on all of the momentum oscillators. Hourly, the hourly coming down here in a manner and resetting in a manner, but still holding the baseline cross-up event. Going to the 15-minute as we break lower. So the 5 time frames overbought, diamonds are flashing. This is because of all of the higher time frames we just went over. And you're starting to see the potential of the 15-minute pushing it up some more. You got this thick cloud of volume insertion. Over the weekend on Sunday in the morning, my time, 3 a.m., the super trend was holding throughout this entire move up from Saturday. So you've had these wicks down into these super trend levels, and it's been holding the super trend. So if you were so inclined to move your stops beneath, you were still in the clear for upside. I'm going to remove this green box because I think it's clear that we hit it at this point. So let's get this box out of the way. We can still go up to this 41K region based off the liquidity we just went over. So I don't mind saying that it is possible that it goes up into this region. The 41.5 region still has some liquidity to grab. We could be going higher until the weekly candle close at this point. The momentum is, we crossed that, basically this threshold of the point of control here. If we look over to the left here, so there is that point of control. If we use the fixed range volume profile here, we cross this threshold here. So we are above this point of control at this point. So the next point is to drift up into these regions over here at that 41.5, 41.9. Basically in that 1382 region would make sense for another opportunity for it to drift and reject off of. And yeah, meanwhile, people will be taking their profits and looking for some alts to possibly get in on if there are any plays for that. So most likely the Bitcoin dominance, the USDT dominance, got a bit of a rejection off of this, coming down for a double bottom event, getting a cross down for this to possibly make a leg lower. If we look at the 3-day here, it did not lock in, or it did lock in with the cross up event. You do have a range here that it could come down into. Ultimately, people are playing with the same money and trying to expand it. So what do? They take the profits from Bitcoin, put it into alts, and then wash that and try to increase that in the alts, and then bring that back to Bitcoin. And then it's this constant cycling of the flow of their profits to make more profits. And so as they shift them into other assets, this is where the dominance is coming down, getting a rejection off of this daily thing. But this is essentially a double bottom of sorts. So if we maintain this range, this could be where they start to reverse up into knocking people out of their trades. Bitcoin dominance did get a surge up here. We were looking at that on a lower time frame as the dominance bounced off the cloud here, similar to Bitcoin, holding this 236 to come back into some more levels here, possibly continue. Well, we are getting the flashpoint of cross down event of the 12-hour. Does this hold in the next 12 hours? Let's go ahead and take a look at the 6 hour already crossing down as we rejected off the 0.65. Do we start to make a last hurrah up and then start to drop down as it gives the alt some play here with the shoulder head and possible shoulder for some play of the alts? Looking at total 3 got a surge up. We were talking about this negation of this super trend, which we have negated on the 6 hour. Do we continue this on the 12? We were getting this surge up, talking about when you're above the cloud, you're going to get this surge, and sure enough, we did. So does this continue is the question. We are above the adaptive moving average on the daily. If we go ahead and pull this over here, the last time we saw ourselves above that adaptive for even a little bit was March of 2022. So this is an interesting place to note where the alts are now. Do we hold this range and continue higher into some sort of bull market, like confirmed bull market, or does it retrace down into the halving for another double bottom event? It's a little bit late to the party to start investing in alts anyway, so it would be more opportune for most if it did retrace into some regions and give another opportunity coming into next year. But it may or may not do that. You could have this basically continuing up into these regions too. But as we had this lock-in of the daily nuke here and we didn't go further down, we're basically seeing an inversion here as they invest and wash their money some more. So if this dominance, the Bitcoin dominance, drops a little bit further down, gives the alts some ease to play ball, and the alts can be playing some more over the next week. Even if Bitcoin just holds the range, the alts will have a field day with their profit thing. So with that in mind, we can look at, we came back to that 1.45 region that we've had on for some time. It's even basically a fair value gap that we put up in here a while ago. Interesting. So let's go take a look at ETH and Polygon. So let's do that now. ETH. Thank you for asking to hit the like. ETH and Polygon. So ETH didn't retrace at all, but did come up to this deviation straight out from our analysis, did not even come back at all. We were talking about how the higher probability shorts are when you wait for that confirmation play, definitely hitting into trying to guess tops and bottoms is definitely not a good look. But if you take a look here, we came from this impulse here. This also had the deviation to the 618 up here. Do we continue? This 12-hour inversion was also a nice clue here when we were holding this cloud above it. When you're above the cloud, it is something to not trade against. You want to go with the flow of the cloud, no matter what the angle is saying. The cloud is your friend in terms of the super trend and the cloud on your side. This is the Momentum Master Trinity. You have the baselines and the trend cloud and the super trend on your side. That is a green light for upside, and conversely with downside. So if we go into ETH now, we have this vector candle that was inserted, a large amount of money in the last 6 hours. Some sleeper orders, time released or whatever, algorithms placed over the weekend by some hedge funds. And looking at the ETH liquidity, let's go ahead and pull up ETH liquidity real quick. ETH on the 1 minute. So ETH on the 1 minute, we have an imbalance of $5 billion in long liquidity to the downside, at some point fatiguing and retracing into these regions. So the weekly candle closed to come down into some of these millions of dollars that are residing below. A lot of 50x, 100x people coming down into that region is not absurd to think. If we go ahead and see what ranges we are looking at to the left, we did take out this high, so this high has been reclaimed, and this is a daily area where we touched our candles up against multiple times. Time to turn off this so we can figure out some levels here. So if we have a fixed range volume profile from even here, there is a level inside there, also some wicks off of that, so that makes sense. And then we have something like this. Whoa, what's going on? Wrong one. So we have another kind of zone here where we wicked into over there. A lot of touches on the daily time frame. So the next zone, $2,400 region. Perhaps we already came above some levels here. If we turn this back on, getting some 6 time frames overbought. The momentum still drifting on the daily time frame. We locked in 6 time frames overbought on the daily. So of all things bullish, this is definitely the bullish key entry zones. Could have been down in this region in the bearish moments. In the bullish moments, you want to be thinking bearishly, as everyone wants to get in. Johnny come latelys want to get into a long, as you should be thinking about shorts. So do we continue higher here? Ultimately, what you'd want to see, if there is like a true reversal, is you would see 3 hits to the high. Here on the 3rd hit here, we did not get a fade, so this was clearing this range. So you'd have to develop another narrative structure for that to be true. 6 hours overbought, 12, basically the daily, the 12, the 6, the 4, all of these time frames are overbought, hence this 6 up here locking into the 6-hour time frame. And it's also didn't lock in on the 4-hour because it came down at that point and then said 5. But ultimately you are overbought on a lot of time frames here for ETH. So taking profits and thinking about where to put them is looking for a re-entry about it. But you have this cross down event here on the 15-minute, so at least coming down and reclaiming some liquidity of those longs we just went over here to come back into some of this makes the most sense at this time, to at least come down into an order block of Johnny come latelys down at 2100 even, and seeing if there is some sort of play that you can have off of this. They did most of their damage to the longs, so coming back down to the shorts while the longs are getting cocky, and then coming off of that and or cascading lower. You got 6 time frames overbought, not any time to look at longs but to do the opposite, and you're seeing the rejection of the first baseline on the hourly. So at least coming down here to that 2100 region and or super trend 2.1% away. I like putting percentiles, not buy and sell signals, because it's all information to be read, not anything to tell you what you should do. So here we're rejecting off of this baseline on the hourly. The hourly is coming down after being overbought. Once again, you had the 6, the 12, the 22, the daily, and the 4-hour, all of these time frames in overbought status. So coming back down into these to see where a reaction might take place seems to be the thing to happen into the weekly candle close for a potential wickage of putting in that higher high. And that is my analysis for ETH. Going over to Matic. So Matic is coming up to a region here. Let me see what the region was on a higher time frame here. A deviation level from this impulse that we put here. There was a fair value gap up here that we came back to claim. So we have reclaimed that gap. Let me go ahead and look at the gap really quick. We also came back above the daily cloud, which is interesting to note. I'm going to turn this off and go into the gap and see where we stand within that. Did we reject off of a okay, so we switched the time frame over to the 5 hour here, and then we're going to go lower, 15-minute. Was that an hourly gap? I was in here maybe. It's kind of an order block actually. It's like there's a fair value gap within that. This was all traded fairly. Going into the 2-minute. Basically traded fairly. Basically here is the only aggressive place. So we had an aggressive breakdown here on Tuesday, November 21st. If we look at it's basically here, 84.67. Basically to there. All right, so if we go back out of this and get to a more specific range of what we're looking at here, let's move this away, get out of replay mode. Up in that region, let's go ahead and take a look at the liquidity of Matic. How's everyone doing? Great show as usual. Thank you very much. Thank you. So if we look at the Matic, we have an imbalance of 206 million in longs to eventually come back and eat up. There is this little band of happiness up here at 83.23 of shorts bound up together as they shorted down here and are now at either break even or underwater. So they could come up to that 83 cent mark. If we go and see if there is something to look at on Matic on this higher time frame, it is a more heavily traded coin, so I expect there is one, and there is. So we can look at the higher time frames for Matic. This is nice. So you have a pool going up to 85 cents and it starts to taper there. Overall, you have some thicker liquidity zones up at 88 cents to clear the range there, but this entire higher time frame of the monthly has some liquidity up in that 84 cent region, similar to where we were putting that fair value gap. So continuing higher just off of liquidity concepts alone, coming up to there would not be strange to imagine. And let's go ahead and throw this back on now. And this is why we have heads up display. Like while I'm drawing my fibs, while I'm looking at all this stuff, I'm turning these things off and on. You don't want to be looking at infrared as you stare at the sun, or you will blind yourself. So these are the three concepts of trading. Momentum is just one facet. So you get the math and the liquidity lined up straight, and then turn on the momentum. So here we go. With the Momo on, you have this momentum drifting to the upside here on the daily, just starting to possibly get a cross-up event of the rising sun event. The last time we had that was back here in October, and boo, we saw a boom on Matic. So are we going to get that play again? The MACD also crossing up. This is a leading MACD formula, starting to get a potential cross up of the baselines here on the daily time frame for Matic. So if this locks in, you could be seeing a surge up on the Matic front. And then if we go to the lower time frames, 12 hour is gassed, but you are seeing this average basically needs time to catch up to itself. So you could see something like this, where you have a few days of Matic trying to catch up, the Williams catching up to its average here as it tapers. So I'd wait for the cross down event of the 12 hour, which is far away by the looks of the gap here on the baselines. So we could be coming up higher, some more on Matic on the 12 hour. If we look at the 6 hour is overbought on all fronts. Money flow starting to get above the RSI in a fatigued state. The angle of the cloud not so impressive in upside momentum just yet. It's kind of a low volume drift to the upside into the shorts that we're seeing here. Some $3 million characters liquidated.
Fatality.
And yeah, so going up into that region for those $3 million guys to clear their range. 4 hour time frame also drifting higher. You had that nice little bounce off the cloud. This is why the cloud is your friend and you don't trade against it. We retraced into that cloud, exactly wicked into it as it was shifting here on the 4 hour. Had you been watching this since Tuesday, this would have been a nice little inversion play off the cloud and boom to the upside there. If we go to the hourly cloud is holding strong, super trend holding strong, and we got another bounce off the cloud here yesterday morning my time, just as it turned to Sunday. And now we're going into the 15-minute. The 15-minute is overbought, still holding the cloud here. How does this differ from ETH exactly? Well, if we go back to ETH, so ETH already got this kind of violent burst up, and we had already cleared a range here. So coming back down into this region on ETH, there was kind of a tapering effect and a burst, and it kind of hangs out for a while here. On the 15-minute, it was a violent, fast move. So coming back and retracing into some of these guys before they have time to pay themselves makes more sense, and at least coming back as we fatigue off of that. If we go to Matic by comparison, Matic has a steady flow of upside momentum on the hourly. You see this? It's kind of steady upside. So it doesn't show any, it's looking more like parabolic in the way that it's just going up here. This kind of angle of this hourly cloud just kind of going up like this. You're creating kind of a parabolic effect. So this parabolic effect of how Matic is just going up shows that it wants to get to this target more than what ETH is doing right now, which seems more like a stop hunt before they retrace back down a little bit. So hopefully that makes sense. And yeah, that is the analysis for Matic coming up into that 84-cent region. That would give you about what? Another 3.66%. Overall, you should be already in a trade if you are longing, not financial advice, but you don't normally want to be in the breakout trader mentality. Not a very good one to be in, but if you know what you're doing, you know what you're doing. It's all on you. So there is this cross the baselines, the super trend. Baselines are not on your side, but the super trend and the cloud is on the hourly as well. It also has to do with the angle of the cloud pointing straight up to 2 o'clock, if not 1 o'clock. This is a very bullish sign for Matic. So Matic wants to get there. In my opinion, it's going to go take that range out forthright without hesitation. And that is my analysis for Matic right now in the moment. And let's go back to BTC. BTC also wanting to drift up into those pools that we went over in the beginning, the 40,005 region being the point of interest. After we inverted this cloud, boom, we saw that continuation, and the first step of that was on the 12-hour here. 12-hour now completely negated, deleting this angle still maintaining at 2 o'clock. All right, ladies and gents, it is December 3rd, Sunday. Hopefully you can enjoy your weekends. I will be taking my kids out from now, and yeah, to see Bitcoin going up possibly to that 40,005 pool. Let me go ahead and just put it back on to wrap it up in a nutshell for you. BTC in a nutshell. Here we go. Okay, so we have this liquidity pool up to 41,500. It's possible that it goes all the way up there and clears it for the weekly candle close, or if you go to a 7-day, the 7-day showing some tapering up to 41.3-ish. We have basically cleared a lot of the liquidity. There is not some immediate down below unless they wick down to 37.4, and overall the weight is to the downside, so watch out if you're looking to enter something new. Beware, unless it is looking at a potential retrace lower. So if we go to the 1 minute, you have these pools down here that opened up. We talked about possibly the 205 million down here, coming back to reclaim that at some point. You got some pools percolating to the tune of 13 billion in long liquidity. When they're done with whatever they're doing to the shorts, it will basically possibly retrace into those guys. So the pools coming up to this 41K region could be the clearing possibility for BTC. As of this moment in time, you have a lot of these time frames gassed out of their minds. So this gassed out, but the angle of this cloud on the hourly is extremely bullish in nature. So if you look at the 15 here, we're starting to get the cross down event, but we just reset the 15 and we could do another stab up to these regions. It is the Asian session, so for the most part we probably go sideways at least until London and New York, and possibly send it similar to this, another repeat of today, sideways holding the line. I would look for holding the line, watching the super trend. Super trend is your friend. So how does this super trend here hold? Do we hold the super trend and the cloud or not? So do we meander around here and then start to hang up as the super trend kind of brings itself this way? And what do we do in terms of holding this line? And that would be your analysis for how do we handle into London and New York if it does go up. Once again, the Bitcoin dominance possibly dropping lower here as it gives the alts time to play ball. So the alts like Matic we just went over could be coming up. USDT dominance is experiencing a rocket ship, which means it's exhausted on how they're entering trades, as in using too much money, putting too much of their USDT into trades so that it will knock them out into USDT at some point. The more we get these rocket ships, the double bottom effect of potentially kicking people into their stop loss could occur. Watching to see how this closes on higher time frame candles. Can it get that exhaustion into a 6 hour or a 4 hour close is the question. And that is my story, and I'm sticking to it, folks. Please enjoy your weekends. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thanks for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision.